Reserve Bank has left the cash rate on hold at 0.25%. Let's go live to our business reporter Ed Boyd outside the RBA. Ed, what did the central bank have to say?
Yeah, Kieran, it was no surprise the Reserve Bank kept the cash rate on hold at 0.25%. But in their statement, they did mention a couple of interesting things. One of them was they talked about how financial markets have been particularly volatile in recent times. But in the last couple of weeks, markets have started to improve, and the bank is crediting that to actions by central banks all over the world, introducing quantitative easing policies. The RBA talked about its own QE policy, saying in the last couple of weeks it's purchased $36 billion worth of government bonds, and it says if the economy starts to slowly pick up, then it will wind down that purchasing strategy over the next few months. Joining me now is AMP Capital Chief Economist Shane Oliver. What did you make of today's move by the Reserve Bank?
No real surprise. I mean, it's consistent with other central banks that have had emergency meetings in the last month, and then when they have the regular meeting, they just really reaffirm what they've done. So no real surprise here. I think, as you just pointed out, it is quite noteworthy that the Reserve Bank has seen the financial markets improve somewhat. And I'd have to agree they have. We have seen, since that March 19 meeting, a strong rally in share markets. And more importantly, from the Reserve Bank's perspective, we've seen a sharp settling in bond yields. Don't forget, 2 or 3 weeks ago, the bond market was becoming dysfunctional itself, whereas now we have seen that decline in bond yields from around 1.5%. I think on the day of that meeting, they got over 2%. The 10-year bond yield is now pushed down well below 1%. So I think the Reserve Bank is feeling a little bit more comfortable that financial markets, lending markets in Australia are behaving in a more normal, functional manner.
Yes, Shane, do you think our stock market has reached the bottom? Is it on the way back up again?
Well, it's been on the way back up again for the last couple of weeks now. There's been an uptrend there. We tend to have one day up yesterday and then one day down. That's today. But have seen a sawtooth pattern going higher and some quite good days on the way up, like yesterday, and a record 7% a couple of weeks back on one day. So that's a positive sign. It may, the way I would see it is this. It's quite possible we've seen the low, but I think it's just way too early to be confident. For the simple reason that we are going to face quite bad economic data in the next couple of months. The economy will contract quite severely in the June quarter, and we still haven't necessarily sort of solved the problem regarding coronavirus. We've seen a welcome decline in the number of new cases. That holds out the promise. The shutdown, the lockdown can be eased a little bit, maybe in the next few months. But we've still got a long way to go here. And it's quite normal in bear markets historically, like the GFC, to have these big rallies, these big bear market rallies. Then the market comes back down again and makes a new low. The way I would characterise it is that it looks like we've started a bottoming process, but it's not necessarily the case we've seen the bottom.
Yes, Shane, once the coronavirus is contained in Australia, how long do you think it will take for the Australian economy to recover? Will it be a quick recovery?
Depends on how you look at it. We're looking for a contraction in the June quarter of about 10% of GDP. That will be a record in terms of the post-war period. You've really got to go back to the Great Depression to get a contraction like that. But by the same token, once the restrictions are lifted or at least relaxed, I don't think they'll be fully lifted at once unless we've got a vaccine in place. But if they start to be relaxed, then we will start to see a gradual recovery. So I do see growth returning in the September quarter. We probably won't get back to previous highs until well into 2021.
Shane Oliver, thanks very much for joining us.
My pleasure.